Welcome back to EDS, and in this video we're going to take a look at how you can write your own options contracts, collect a premium upfront and generate a consistent return year on year. So the first thing we want to do is open up our brokerage platform. It is a Saturday, the markets are closed, but we're just gonna take a look around. We're not actually going to place any positions, and we want to see where we are in the option cycle. If you've seen any of our previous videos, I'm sure you guys know the sketch by now, but I'm just showing you that it really is this simple. Don't be fooled though. Simple does not mean easy. There's a lot of work that needs to be put in to get to the point where you understand what's happening and why. But for the purpose of this video, we're just going to take a look at how to actually do it and what it looks like. So we just want to pull up any underlying. We've got Apple here. We've got a list of expirations. We've got monthlies and weeklies. We want to be on a monthly and we want to be between 30 and 60 days. We're going to go with December 20th, 62 days out in time. 27 days is too close for us on November 15th. So December 20th it is. And at that point, we don't need to open up the expiration date and see the options chain. We just want to get this information 62 days out in time. And then we want to go over to our watch list and we want to use that information and filter out any underlying that has earnings over the next 62 days. We don't want earnings to disturb our trade, and we also don't want to be looking at anything that has a low liquidity level. So we want to filter out anything with a 1 or 2 star liquidity level. Each broker platform is going to be different, but basically it'll be the same thing. Just figure it out for whatever broker you're using. Filter out things that have earnings and filter out things that aren't very liquid. Now we want to just sort things from high to low IVR. And at this point, we just want to be looking for things that would go well with our portfolio with an IV rank of 50 or more. Sometimes 30 or more can be okay, but generally speaking, 50 or more is where we need to be. So we just go down the list here and we just take a look at everything one by one and see what would fit well in our portfolio. Of course, if you've got a ton of tech companies in your portfolio that you've already got positions on, maybe don't open more positions with tech companies. And if you've got loads of airlines, food companies, whatever, just stick to something different. By all means, you can look at the correlation between whatever it is that you're looking at and SPY. tastytrade displays it here as a number between 0 and 1. You can also use beta weighting. All this stuff is fine, but generally speaking, just use your common sense and keep your position sizing in check and you'll be fine. So we go down the list and we just want to see what stands out. And as well as looking at everything we've already mentioned, you want to make sure that the size of the product fits well based on the size of your account. For example, we don't want to be looking at underlyings that are trading for, say, under $10. The strike selection is going to be not very good. And likewise, you can't really put naked positions on with an underlying that's trading at $500, with a small account. It's just not going to work. So keep that in mind, and that's just going to sort of come with intuition. There is no chart that I could give you. The smaller the product, the smaller the size of the position generally. And also you got IV to take into account as well as IVR. So with that in mind, we just go down the list. If you have a look at TLT here, it's trading at $93. Well, it was last trading at $93 with an IV rank of 54.9 and an absolute IV percentage of 19.6. We did have a look at AA the other day. And I think we can have a look at TLT. We've not had a look at TLT in a little while. So if you just go over to TLT, and of course, we're going to be at December 20th. And now we are presented with the options chain. We want to sell one call, one put. I like to be anywhere between 15 and 20 deltas. We've got a 19 delta here on the call side at the 100 strike. And we've also got an 88. We've got an 18 delta at the 88 strike here as well. So essentially, we've created a range for ourselves between 88 and 100. And we've got a 70% chance of success on this position if we hold till expiration. And if we just want to get 50% of max profit and get out, we've got a 90% chance of that happening at some point over the trade. And we would collect $135 up front in premium. Our broker is going to require 1.3k in buying power. So about a 10% return, which is not bad for a naked position. So With that in mind, if $1,300 was a bit too much for you, you can just simply go a little bit further out, say $3 wide, buy a contract there. Same thing on the put side, buy a contract $3 wide, keep the width the same on either side. And what that's going to do is going to limit our loss. Our max loss is now whatever the difference is between our short and long minus the premium we collect. And that is how we get to our max loss. And our broker knows if our max loss is our max loss, then it only needs to take what our max loss potential is in buying power. We no longer have an unlimited loss potential, so our buying power requirement has been severely reduced. This is how simple it is to find positions, manipulate positions to fit inside your portfolio. Of course, there are a lot more nuances. Anybody can just put a position on. The real skill in the game is how to manage risk once the position is on, because from day one, price is going to move around and your P&L is going to be affected on one side at all times with a strangle or an iron condor, which is what this is here. So that's where the kind of skill and intuition and experience comes in. You also need to keep in mind the overall size of your position relative to your portfolio. And we've got a position sizing template that's free for everyone to use. The way it works is you enter in the size of your portfolio and you enter in what the current VIX level is, and then everything will be automatically calculated for you thereafter. And at that point, you simply just use this information to form the backbone of your portfolio, and long term, you'll be just fine. If you want to learn in more detail and learn how to develop that intuition, the sixth sense, and get to a point in your trading career where you can do this completely by yourself. If you want to get to that point as fast as possible, link in the description, head on over to EDS Premium and get yourself signed up. Inside, you're going to have access to our portfolios, and that's going to allow you to see in real time the positions that we're placing, how we're adjusting, how we're managing risk, and there's also a full course as well. So both of these things in conjunction is going to give you the fastest rate of growth in your trading career when it comes to writing options contracts. No prior knowledge is required, of course, and there's also it is a private community. So if you get stuck, you can speak with other like-minded individuals. You can speak with myself directly. There's a 100% money-back guarantee. So after 6 months, if you've studied our full course and followed our trades and how we're managing and adjusting positions and you haven't seen results, then we will work with you for free until you do, or you can request a full refund. So on your part, it's completely risk-free. Right now, it is £1 a month. To join, the price will be increasing. However, once you're in, the price is locked in for you. So you are rewarded for getting in early. And with that being said, I will see you guys on the inside.